Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets where record highs were set again this week. He believes we might see a slight pause from now until the 20th of the month. Ross takes a look at gold, crude, and the U.S. and Canadian dollars. He also has a special offer for our listeners. Longtime trader Victor Adair examines what has happened to the market since the re-election of President Trump and what's going on with stocks, bonds, gold, crude, and uranium. Author of The Money Bubble and other books on the economy, John Rubino discusses the Trump effect on the markets, economic and political troubles in Europe, and the rise of Bitcoin. Publisher of the Campbell.Real Estate Timing Letter, Robert Campbell, joins us from San Diego to discuss real estate. He believes the U.S. and California markets will continue to increase in value for about half a year, but after that, there could be a big correction. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to the show.
Good to be with you, Jim.
Ross, do you have your Santa hat on?
The Santa hat, well, we're going to continue with 25% off to new subscribers, so that's for annual subscriptions, and you can find the link on the website, chartsandmarkets.com.
Ross, stock markets, it seems every week a new high. Same story this week?
Same story this week. You have the pauses within the days. The markets look as though they're ready to maybe have a little bit of a reversal, but by the end of the day, most days, we're just tacking on a little bit here and there, and before you know it, you've had, what have we got here, like a 7 or 8% move since the 1st of November. And this is pretty much the norm. And historically, the rallies are usually anywhere between 6 and 12% as you move into middle of December. And this one is pretty much on track. As we say, the November, December, the two most reliable months on the upside. And at this point, you would allow for a small pause, usually somewhere between the 6th and the 20th of December. You can get a bit of a pause before continuing on once again to the upside. And, the turn of the year rally, the Santa Claus rally, usually will kick in there anything after the 20th, where you start to gain upside momentum again, and that runs you into the middle of January. And in particular now, coming up to the first year in the presidential cycle, when you had a change here in the party in power, the probability is that you'll see a pretty important high during January, and it can go into a corrective phase after that. So for now, trend is up unless the support levels are given way on these minor corrections. We're looking at the 20-day moving average as an initial support level for things such as the S&P, and that would be just under 6,000. The index itself is sitting at 6,100. So you could have that kind of a pullback and still be within a methodical uptrend. A deeper correction could allow for the 50-day moving average, which is just under 5,900 on the S&P.
What's going on with gold?
A quiet week over in the gold market. We haven't had a big piece of action there in the better part of 2 weeks. There was that hard correction into the second week of November, and then it bounced back. But precious metals as a whole, we're getting now a week with a higher low and a lower high. So it's kind of boxing itself in here. Seasonally, you'd expect to see gold come back to life as we move through December and into January, February. And I think we better watch the 2,700 level on the futures contract as the resistance level that needs to be exceeded before this gains any upside momentum. On the lower side, the 20-week moving average is down around 2,600, and we need to see that hold. I think it's a pretty darn important level right now. The trend is up, but you always have to be aware of corrections that can come along.
What's happening on the crude oil market?
We are now 5 times down at $67, and so this is just has got no strength at all to speak of. Each of the highs recently has been progressively lower, starting from the middle of September around 78, then 72.5 at the end of the month. Now we've had highs of 71 and change, closing off the week at 67, and this is the 5th time down to this $67 level. It pretty much in line with what we've been talking about. Weakness into a into a December, early January low, and then you get the seasonal uptick. But the best thing we can do right now is to get a really good clean out on the downside. And if you look at the way this thing has been moving, you can measure probably from the most recent highs around 72.5 down to 67, and that's a $5.50 range. You take that off the 67, and you're going to be targeting somewhere around 61 as I think is an optimum level. If we can get down there, get some good oversold readings, we'll start to get pretty excited about it. But for now, no reason to look at much more than just bounces. And if you take a look at the stocks like the XLE, it was up at 98 on the ETF at 5-6 weeks ago. Now we're down to 91 and change. Support isn't until you get down into the mid $86, $87 range. So even the stocks look heavy at this point, not just the oil market.
What's happening on the currency front?
The currencies, the U.S. dollar, it had that big run on the upside and has done a nice job of consolidating. It pretty quiet week overall, closed off at just under 106, which is testing the breakout level. We had important highs back at a year ago at 107. In May, the high was around 106.5, and now we've got it coming back and testing that 106 range. So trend is up, having sort of absorbed that massive move on the upside from par all the way up to 108 that we saw during September through November. And as long as this consolidation holds around this 106 level, I think the easiest path is still to the upside. And the Canadian dollar, the other one that we keep a close look at here, down to levels we haven't seen in 4 or 5 years, and it just has nothing but poor performance. It's for all that it's been going down with the sort of leading on the downside with the oil market. If you take a look at the CRB index, Commodity Research Bureau of index of and the commodities, the dollar is underperforming both of those. So there's just absolutely nothing that's good here. And you take a look at the interest rate differential, the difference in 2-year yields in Canada and the U.S. Canadian yields are about 1.2% below U.S. ones, and that's the lowest level that we've seen in over 25 years. So there's no reason to expect the support level in the Canadian as of yet, and until we see either a divergence with the dollar holding relative to oil and the CRB, easiest path is still to the downside, with any bounces being selling opportunities.
Ross, can you remind us again where to get that special offer?
The website is chartsandmarkets.com, and right there on the front page is where we have the special. Also, there's a link up there for the junior golds. Typically when this gold market does turn around and have its next big move, the juniors have the opportunity of really bouncing back well. So, a basket of juniors could do, amazingly for people that are willing to dabble in something a little more speculative.
Ross, thank you so much for the update.
Pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on X at Charts by Ross. Coming up, Victor Adair, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Victor Adair, recently retired from nearly 50 years of being in the brokerage business in British Columbia, but still very active in the markets. His website, Adair.ca. Welcome back to This Week in Money.
Jim, it's always a pleasure to talk with you. Thank you.
It's been about a month since Trump won the election, creating an earthquake across the political landscape. Has there been something similar in the financial markets?
Well, let's see now. Okay, I'll try to play this straight. Yeah, I think what we've seen in the markets is a real recognition of what is going by the title of American exceptionalism. Okay, so how I see that, say, in stocks, is money's leaving the rest of the world and coming to America. How I see that in currencies, the money is leaving other currencies and going into the U.S. dollar. I mean, do I need to go on? Am I making my point? Is that sort of an earthquake? It has been a bit of a one-way road here, I guess, since Trump won the election. And, I'm not going to go into the political side. As you just mentioned, the political side, there's been an earthquake. But I think maybe in a word, Trump has introduced another level of volatility into the market. And, that'll probably stay with us because he's just that sort of a volatile person, at least the way he shows up and just announces things. Not the least of which were the 25% tariffs on Canada and Mexico recently. There's been, I think the market, as well as politicians in different countries, are trying to prepare for what will happen under Trump now that once he becomes the president. I think probably the market will be better prepared than politicians will be, let's say that. But even at that, there's probably going to be some unexpected things come from Trump that'll hit the market. So I guess what has happened is clearly, the stock market generally has gone up. Some stocks have gone up a lot since Trump was not elected, but won the election. Tesla comes to mind. We're up 50% there, and there's also, Jim, there's been kind of a change in tone in the market where we're making new highs. It feels like every day, and it feels like there's a lot of hot money coming into the market, speculative money. People are trying to take on more leverage, it's FOMO. There's that fear of missing out. And of course, some of the veteran traders that I know, and we gossip about this sort of thing, we're all just a little leery, I suppose, when the market gets so that, it's the old story when the shoe shine boy is giving you tips. You want to be saying, okay, thank you very much. I think I've seen enough of this. I don't know where we're going there. I certainly don't think this is the market to try to fade or to get short. There is a lot of things conspiring here to continue to drive the stock market higher, and that's an innocent conspiracy. But corporate buybacks are continuing. It looks like we're going to have $1 trillion in corporate buybacks this year that we're in, and Goldman Sachs another $1 trillion coming next year. It's a seasonally favorable time of the year. Now we're going to start talking about the Santa Claus rally, but the stocks over time, over a 20-year period, generally run higher at this point in time. So yeah, it's there has been, let's say, an outbreak of optimism in the stock markets, in the currency markets, like it's the U.S. dollar or nothing. And those are two of the things that I see. There hasn't really been an earthquake of any kind. There's been some changes, but no earthquake in the interest rate markets, and the commodity markets haven't had anything dramatic. So I think currencies and the stock market have maybe been more in the earthquake department than the others.
I was going to ask, what's a shoeshine boy?
Oh, well, it's an old story, I think, about Joe Kennedy. That was the father of the man who went on to become president of the United States, John Kennedy, back during the late 1929s or something like that. There was this apocryphal story that he wanted to get his shoe shine, so the kid that's shining his shoes is giving him stock tips. And when he thought, okay, this market's gone far enough, when the guys that are shining your shoes are giving you tips on how to buy this, what stocks to buy, you should be selling.
I remember my 60th birthday party when everybody was saying, "Do you got Bitcoin? Bitcoin, can't lose with Bitcoin." The next day, it fell $7,000.
I don't want to.
It dropped in half.
You had your 60th birthday.
Yeah. Nobody does. Now, American stock indices have been rising since the election. Are there sectors or individual stocks that have caught your eye?
Well, I mean, I just mentioned Tesla, for instance, and I mean that's always been a very popular stock. I think Tesla options trade more volume than options on any other stock. But yeah, with Musk's special relationship, let's call it, with Trump, it seemed to, people thought, he can do no wrong. There will be no impediments placed in his path or Tesla's path. So yeah, that had a terrific run at a more modest pace, but still pretty hot. The whole banking sector in the United States has done well. I think the ETF that I keep an eye on that for the banking sector is up about 12-13% in a month. These are banks. Usually these are not rock and roll stocks. So yeah, there's been that. Then Walmart. I mean, talk about sort of the opposite of IA, say, or large cap tech stocks. But Walmart's been on a hell of a run going up. Another stock that I watch, always as a barometer is Caterpillar Tractor. I figure if Caterpillar Tractor is getting bid, the market knows there's going to be a lot of construction and this and that out there, and that generally plays through to a stronger Main Street economy. I don't trade individual stocks. I should say I almost never trade individual stocks. I've always been a futures guy, so when I look at the equity markets, I'm looking at the indices as opposed to individuals. So when I look at individual stocks, that's more just to say, I wonder why that's happening, as opposed to, if that's something I'm going to buy or get short.
The Canadian dollar closed at a new 4-year low this week. Is that the result of the Canadian dollar falling or the U.S. dollar rising?
Yes. Well, it's actually it's a little of both. And I know there's Canadians out there that have some wounded pride, at least, and maybe at another level are just darn cranky that the Canadian dollar is going down. I get it. Our import costs are going up, and if you want to go on a vacation somewhere, the Canadian dollar doesn't go very far. But yes, it is a bit of both. In my trading desk notes that I posted last week, I put a bit of an extended section in there on the Canadian dollar and showed that over the past 25 years at least, and actually it's further than that, the Canadian dollar has been highly correlated with the ups and downs of the commodity market. And I would just use the Goldman Sachs or the Bloomberg commodity indices as a a measurement of the commodity market. So, if the world, for instance, let's do it this way. The Canadian dollar has hit its lowest sort of since currencies went free floating in the 70s at around 62 cents in 2001, I think it was. And then 6 or 7 years later, we were at probably the highest we've ever been. We hit $1.10 U.S. And during that same period of time, that's when China got a pass with the World Trade Organization, and now people were aggressively trading with China, and China was buying commodities like there was no tomorrow. So commodities went on a real race to the upside, and the Canadian dollar went right along with them. And that I give you that example because I've often said, Jim, the Canadian dollar, the price of the Canadian dollar relative to the U.S. is more often discovered by things that are not Canada specific. In other words, back in the day, we'd make fun of Jean Chrétien, for instance. If he said something and go, oh, well, the Canadian dollar is going to go down because of what Chrétien said. It was really a joke because what happens inside Canada, like Canada specific, I call it, seems to have much less impact on the Canadian dollar than things that happen outside. Now, I know you're going to have listeners that are going to say, if it wasn't for Trudeau, the Canadian dollar would be higher. Okay, I get it. But I'm going to tell you, I can give you evidence that what is going on lately, in a bigger picture sense of things, is the U.S. dollar is going up against everything. And the Canadian dollar is just like collateral damage in that. I mean, since September, the Canadian dollar is down about 5%. The euro is down about 6%. The Swiss franc, my God, the Swiss franc, it's down 5%. The Australian dollar, sometimes called a commodity currency along with Canada, it's down 9%, since September, while Canada's down 5%. And I could go on. The Mexican peso's down, 6% or so. Brazil, another commodity producer, down 10%. The British pound's down 5%. So it's not just the Canada. Now, if we had a dynamic, really great guy running the country, or at least the head of the party down in Ottawa, then maybe we'll get a change in that effect. That would probably be great, and Canadian dollar would do better. But just lately, ups and downs of commodities are very important to the Canadian dollar. And if the U.S. dollar is going up against most currencies, it's probably going up against Canada. There's that. Now, there is one thing here, and that is interest rates. For most of my career, Canadian interest rates have been higher than U.S. rates. And here over the past couple of months, or maybe a little better than that, because the Bank of Canada has been cutting rates more aggressively than the Fed, we have interest rates in Canada that are lower than they are in the United States. And that has definitely been a drag on the Canadian dollar. And if you take it one step further, you say, well, why has the Bank of Canada felt the need to do that? Well, and for people that want to go political, that say it's because of poor government policy, and that's caused the Canadian dollar to be weaker, therefore the Bank of Canada has to do what they do. I get it. That's certainly part of it, but that's not the whole thing. So, sorry, Jim, I kind of rambled on, but that's the Canadian dollar being at four-year lows here is a combination of the U.S. dollar going up and the Canadian dollar going down.
Will the Bank of Canada cut rates at this week's meeting?
Yes, I really think so. I mean, the employment data we had this week was just sort of another nail in the coffin for that. The Canadian economy is weaker than the U.S. economy. I think it's sort of a layup that they were going to cut by 25 basis points. Now it's looking, when I look at the forward interest rate markets in Canada, it looks like there's at least a 50-50 chance that they'll cut 50 basis points. I don't know. There may be some political considerations that come in at that, but just on the basis of if you were going to cut rates because the economy looked soft, that is the non-government employment sector of the economy, then, yeah, they'd be cutting by 50.
Bond prices fell after the election, but rose when Trump picked Scott Bressent as Treasury Secretary. What did you think about that?
I thought it was terrific. I think there's a lot of people that maybe have an interest in certain sectors of the political spectrum who are wondering, who Trump will pick for such and such a job. The market really liked the idea of Scott becoming the Treasury Secretary. He seemed to have all the skills and all the connections and all the history and that sort of thing. But there was a risk that Trump might pick somebody's, father-in-law and put him in there. So when he didn't do that and he picked Scott, I think the market breathed a sigh of relief. It's, to use the old cliche, Scott would be seen by the market as being an adult in the room when it came to some discussions about how America is going to finance the things that they do. That's what the Treasury does. Where you get the revenue from, how you spend it, and all that kind of thing. So, and also, there's always this. When you look at a market, it was positioning. The bond market had been trundling lower and lower and lower in price. Yields were going up. The bond bears were saying, look it, and I'm inclined this way, believe me. The bond bears were saying, these guys just it's impossible for them to be able to balance a budget. They're going to keep spending money, and they're not going to get the revenue in, and the deficits are going to get bigger and bigger. And one of these days, the people that buy bonds are going to say, no, I'm not doing that anymore, So the positioning had been very bearish on the bond market. So when it kind of turned like a gapped higher on the Monday morning after that, Trump had announced late on a Friday afternoon that Scott would be his pick for Treasury Secretary, and he will likely just blow right through the what do they call it?
Confirmation hearings.
Thank you. That's exactly right. The confirmation hearings. So, the market breathed a sigh of relief. It started to rally, and some of the people, I guess, who had been shorting it for the past couple of months had to go buy back their shorts. So we've had a good rally in the long end. Interestingly enough, the long end rates are falling, bond prices going up, but at the short end, not so much. So, as I said earlier, there hasn't been any real dynamic changes on the interest rate market, but there has certainly been a change in the curve.
The gold market had a terrific rally from October 2022 to 24 October, but lost momentum in November. What are your thoughts on gold?
As you and your regular listeners certainly would know, I've traded gold for 50 years. I've been involved in gold in a lot of ways, and I think the rally we had from the lows we made just before Hamas attacked Israel in October of 2022, those lows to the highs we had in October of this year, that was about a 75% rally. That's a substantial rally. If you've bought something and it's up 75%, you probably feel pretty good about it. And it probably went, a little too far and started to back up. What I've seen is in the futures market, the open interest, which just measures the total number of positions outstanding, is down about 20% since the end of or late October. Here's what, in a vernacular, here's what I think happened. I think that the gold market had hit these all-time highs above $2,800, at least on the nearby futures. People that had been in the market for a long time, in some way or other, said, I think I'm going to take some profits here. Maybe there's something else I want to do, like I want to buy Bitcoin, I want to get into the stock market. I don't know. But we've seen a reduction in the number of positions outstanding. That doesn't mean the number of players, but I think it's been a correction. And the correction is, what are we running? A little better than 5 or 7% or something like that. It's not exactly a crash. So that's how I view it. And I think the money that came out would be, I would call it hot money. Speculators that'll, one day they're trading crude oil, the next day they're trading corn, and the day after that they're into, magnesium or something. So the people that are like true believers in the gold market, I'm sure, are still there. But the guys that kind of dance in and out and make some money here and there, I think those are the people, I should say, that have maybe caused this correction that we've had off the highs. And that's how I feel about it.
WTI crude oil has been trending lower for several months and is near 3-year lows. Do you see higher or lower prices ahead?
Boy, yeah, crude has been heavy, and there are folks that are, let's say, just like in the gold market, there's people that are perennially bullish on gold, and we'll give you all the reasons why it absolutely has to go higher. We have those folks in the oil market as well. I'm not saying they're wrong. It's just, they can't. I imagine they can't believe that prices are down at $66 and $67 a barrel, but they are. And sometimes when you're wrong in the market, if you're bullish and prices are going down, you have to examine why. And you may say, well, it's just short term, and it may be so, or maybe some of the pillars of your thesis need to be reexamined. And conversely, by the way, when the market races to the upside and you're bearish on it, then you say, hey, I guess I'm missing something here. So the crude oil market relative to other markets that I trade is, the way I look at it, is much more subject to supply and demand than, let's say, the currency market. The currency market's much more driven by sentiment. I think the WTI market's much more driven by supply and demand. I wrote a piece about China in my blog last week and I thought, why hold back? I just kind of have this attitude that China is uninvestable. If you must be really short of things to do if you want to take money and invest it in China, given some of the existential risks that are involved in being there, and people have made a fortune doing that. So, I'm an idiot to say it, but China seems to be slowing down, and I wondered whether or not China is going to be on a trajectory like Japan was, except with a roughly 30-year delay. In 1989, the Japanese economy was red hot. The stock market was even hotter, and the real estate market had gone to the moon. And over the next 30 years, all of those things reversed. And, we've had this thing called the widowmaker, when people tried to pick the turn in the bond market as the deflation in Japan just carried on and on and on. So I think there's been a real slowdown in China, and I think it's real. And I think the people in China are hoarding their money and aren't going out and buying stuff, other than maybe they were buying gold and they're buying government bonds. Bond yields in China are lower than in the United States, substantially lower. So China was a huge demand for crude, and maybe that's part of it. India is, the coming economy, and you would think that their demand for crude would rise. It has been rising. I know my good friend Joseph Schachter thinks that India might be the market that would, when they really get rolling, try to become a first world country. That's what I mean by rolling. That their appetite for crude will be fantastic, and he sees all-time highs for crude out in the future. But right in through here, I guess there's one other thing. I wonder. You look at the American inventories and you see what stocks are at. You think, are Americans actually demanding, or at least the growth in demand is diminishing? Anyhow, and then the other side, on the supply side, OPEC wants to, increase production so they can get more money, but at the same time they don't want to ramp up production and put the price down. So the market seems to be net negative here. Now, that doesn't mean that it won't explode, and of course crude is one of those things like gold that's very vulnerable to any kind of geopolitical shock that hits the market. And actually, while I'm on that, I think the geopolitical stress thing, which is an input to crude oil prices, is cooling down. I think in some respects, and maybe even this plays into the gold market as well, that the market is pricing that Trump may deliver in some way on his promise, or where he just declares he's going to end the war in between Ukraine and Russia. Well, if that happens, maybe there's more crude that can come out of Russia. Whatever. There's a number of moving pieces here, whether it's the supply-demand thing that I'm focusing on, or the geopolitical stress, and then the production side from OPEC. They're trying to keep a lid on production so that they don't drive prices down. I think, I don't have a view in terms of our prices going to be higher or lower going into the future, but I'll be watching that. We've been, if I go back to positioning here, the market's been very negative. It would be vulnerable to a rally if something was to spark the market to start going to the upside. Oh, and I guess while we're on crude, let's broaden it out in the energy sense. This week we had my favorite uranium barometer is just the share price of Cameco has gone to a new all-time high, and I think what was it? It was up about 40% or so in the last since September. So anyway, uranium. Now you talk about a supply-demand story. I mean, the supply-demand story in uranium is just like it could be astonishingly bullish. If we go to the nuclear power route that so many people think is a good idea, including me, there ain't enough uranium around. So I think the uranium market now it's wickedly volatile for sure. That is the share prices of these uranium issues, but uranium looks like I think a much more bullish future than crude, and watch me be proven wrong. One more thing, Jimmy, before I stop ranting about crude oil. I was just thinking about Scott Brissett being the Treasury Secretary. Trump picked a winner for his energy secretary in Chris Wright. I'm just so impressed with Chris, and so impressed, honestly, with Trump for picking him to be the new energy secretary in the United States. I think it's just another example of why America deserves this title of exceptionalism.
This interview will be our last for 2024. I look forward to talking to you again in early January. But before we wrap it up, was there anything that happened this year that may have set the stage for markets in the new year?
Well, okay, come on. That's sort of a softball question in a way, but it's Trump, okay? I mean, for sure, there's Trump. I mean, Trump, I think, is going to equal volatility. And I said I wouldn't go political, but I can go somewhere between political and markets. And I think Trump kind of accelerates the end of woke, and how that'll impact financial markets. On the less rosy side, though, I mean, I tell you what, I think I mentioned earlier some of the veteran traders that I talked to, and I'm in that category. I've been trading markets for 50 years, and you've seen ups and downs. I've seen, the American stock market fall 25% in a day. I've seen the Dow Jones fall 50% from its highs back in the day, in the 70s. These things do happen, and they generally seem to happen when everybody and his dog is chasing the market higher, and it kind of feels like we're there these days. I noticed there's also I'm calling it a bifurcation in the market. While there are people out there, that hot money that I talked about, that are chasing this and chasing that, whether it's Bitcoin or Tesla or, some 0 days to expiry options, and there's zillions of dollars being bet on those sorts of things. While that's happening, I see there's now $7 trillion in money market funds. That's a new record high. And I point that out because it seems the longest time, as the money market funds continue to ramp up in size, there was a whole bunch of people who were saying, hey, watch, when interest rates start to go down, all that money that's over there, it's going to come flooding into the stock market and drive it higher. Well, I'm not so sure. I think there's maybe it's older folks or whatever, people with older folk kind of ideas who say, I think this whole thing is kind of frothy right here, right now. Maybe I've done well by being in the market. I've been the S&P is up 50% from where it was a year ago. Shares of Royal Bank are up 50% from where they were a year ago. Maybe I'll take some money off the table and just kind of shove it into T-bills or whatever in money market funds, and just play it safe. So I think we've got a stage being set here as we go into the new year. I mean, does it get any better than this? It certainly could. I mean, the guys that are pushing AI are saying it's going to get fantastically better. The guys are true hardcore coiners, They think it's going to get fantastically better and different. The future's so bright, I got to wear shades and all that kind of thing. I get it. And maybe that's it. And, Trump's, in a way, their hero because he's going to usher these things in. And, I just have my innate suspiciousness when the shoeshine boy, as I described, is telling you what you should be buying because he's making a fortune. You should maybe take some money off the table.
Victor, thank you so much for chatting with us.
Well, Jimmy, thank you kindly for having me on, and Happy New Year to you and all your listeners.
My guest has been Victor Adair, his website, Adair.ca. Coming up, John Rubino, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is John Rubino, author of several books on the economy, including The Money Bubble. He founded the website $collapse.com. You can find him on Substack at Rubino.Substack.com. Welcome back to This Week in Money.
Hey, Jim. Good to be back.
How important was November's U.S. election?
Extremely important. In every election, they say this is the most important election of the century or since World War II or whatever. You hear that a lot. This time it was actually true in the U.S. because I'm not sure we would still be the same country with another 4 years of the policies of the past 4 years. We were blundering into World War III in Ukraine and possibly the Middle East. Our southern border was wide open, and millions, if not more than just millions, of military-age men and unaccompanied children were coming across the border completely unvetted. And we were, drifting towards dictatorship where we were censoring constitutionally protected speech with no consequence. So the new administration that's coming in has a chance to correct a lot of that. And they need to get to the whole war thing right away because what's happening in Ukraine is terrifying with all these new weapons being tried out, and us allowing them to use long-range missiles to strike into Russia, and Russia coming back with hypersonic ICBMs and stuff. This is existentially threatening. But at least we've got a chance to fix this stuff now. So it worked out as well as can be expected with a landslide victory for one side who now gets to address a lot of these things. And, here's hoping they at least take a serious stab and succeed to an extent about some of them.
The incoming administration wants to ramp up energy production and dramatically cut government spending. How likely are they to succeed?
Well, both of those are laudable goals, but they both have one of those fatal flaws in the process. And when it comes to energy, for instance, cutting regulation and otherwise encouraging new, coal and energy and natural gas production, that's a good thing. But since the government is doing it, or the incoming government is doing it with the goal of lowering energy prices, and therefore addressing inflation, there's a problem with that because the guys who are, drilling new wells and new coal mines and things like that, they need a reasonable guarantee of a fairly high price for whatever it is they're getting and selling in the future. Otherwise, it's not worth the risk of starting this new project. So if the government is actively trying to lower the price of energy, that means a lot of mines won't get started because the entrepreneurs and the big oil companies and gas companies will look at that and say, well, I can't predict the future, so I'm not going to take this risky project on. So we might actually see a decrease in the amount of energy production if the government is actively trying to lower energy prices. Now, with government spending, that's also really laudable. I mean, if we could cut the size of the U.S. government in half, the way, for instance, Milei in Argentina is doing in his country, that would be awesome. But it's also really hard to do. And cutting spending is especially hard because so much of what the government does is off limits to budget cutting. I mean, it's going to be very unlikely that a Republican administration is going to dramatically cut military spending. And that just leaves Social Security and Medicare. And those two things are basically transfer programs. They don't require all that many people to take tax money or borrowed money from one place and then send it somewhere else. So it's not like you could, cut 2/3 of the personnel from the Social Security Administration because most of the guys who are there, and there aren't all that many of them, are doing stuff that has to be done. And in any event, you're not going to cut spending for programs that benefit baby boomers. Try to cut our Medicare and see what happens. We're a very self-interested generation. We're also very huge and populous and powerful. So it's going to be hard to cut $2 trillion out of the government budget. I just don't see that happening. But what they can do is they can scale back a lot of different divisions. Like they can close down the education department, for instance, and they can move a lot of Washington-based bureaucrats out into the country, set up satellite offices in various places, so that the bureaucracy doesn't become Washington-centric, or stops being Washington-centric. So that's good. I mean, there are good things that can come from this, but we don't want to expect too much. A lot of what politicians say during an election is a sales pitch and not something that's actually completely doable on the scale they're talking about. And I think these things qualify, but we can still get some good things done in those areas.
Well, it's kind of hard. Elon Musk's in charge of it. He wants volunteers willing to work 80 hours a week for no pay to do it. How do you find those people?
Well, he's an inspiring guy. And the chance to work for Elon Musk on a good goal probably excites a lot of people. It wouldn't be a surprise if he got a lot of volunteers to come in. A lot of techies who want to take a year off from Silicon Valley and rewrite the code that runs some aspect of the energy department or Medicare or something like that. That's completely possible. It's just that what they do is highly unlikely to generate $2 trillion a year of savings. It might generate some savings. It might dramatically increase efficiency. It might scale back some of the swamp monster kind of thing going on in Washington right now. So it could all be good stuff. Just don't expect the numbers to work out the way the numbers were presented in the original electoral sales pitch.
Does the U.S. have an auditor general who takes a look at how the government has spent money? And maybe you could have a department that actually put their recommendations, if you have one, into effect. Wouldn't that work? Because what I see here in Canada, the Auditor General comes out every year, says you wasted $200 million on this, you wasted $3 billion on that. Nothing's done about it. They just file this report. So I'd much rather see somebody act on these reports from after these audits are held.
Well, what they're saying is that the president actually does have the power to just not spend money that Congress appropriates. So if Elon Musk and Vivek Ramaswamy call up Trump and say, hey, these are the things we've identified that are just waste, just pure waste. They don't do a thing. In theory, Trump could just say, okay, well, we're not going to spend that money, and we'll just hold on to it. We'll use it for other things, or we'll just give it back to taxpayers or whatever. That would be cool if it was possible, but it's not going to amount to $2 trillion. We're talking hundreds of millions here, a couple of billion there, all of which is good. The cuts would be good and it would be positive. We just shouldn't get our hopes up for a complete revamping of the federal government. And the same thing with term limits, for instance. That was another platform plank that Trump ran on. But, good luck getting congressmen to vote for themselves to lose their jobs in 2 more terms or whatever. So, I don't know. We'll try for a lot of stuff. We'll get some things maybe. But I would be pretty happy if we just get peace. If the wars stop, we cut deals around the world so that we're not actively blundering into World War III, that alone would make Donald Trump this century's Winston Churchill. If you can get anything beyond that, I would consider that icing on the cake.
Well, I always thought one of the great primary examples of government waste is the U.S. Army buying optically guided kinetic connecting devices for $1,200, but you can buy one at Home Depot for $12.95. It's called a hammer. Things like that. Yeah, I mean,
there's stuff like that. They can find stuff like that, and they absolutely should point it out and stop doing it. It just won't amount to numbers that are what we've been promised. So we should just need to manage our expectations for what the Doge group can do, but we should cheer them on and hope they get some good things done.
The government of France is apparently falling. Is this an issue for the rest of the world?
Yeah, in the sense that Europe is basically devolving into something very different that's not a coherent monetary union and a coherent trade bloc. Because basically it's the same thing with all the fiat currency countries everywhere. You run out of money eventually when you have a currency that gives you an unlimited credit card and you abuse that privilege by maxing it out. So France's problem, the current problem among many problems, is that their budget deficit is out of control, and the government is trying to do things to bring it back into balance, and that's leading to a large number of people wanting that government to be kicked out of office. And so they got the left-wing politicians and the right-wing politicians both calling for a vote of no confidence. And if the current government falls, then it's not clear who replaces it, because the right and the left don't really have enough votes right now to form a government themselves. So France basically just collapses into chaos. And the Eurozone, the euro is already falling dramatically versus other currencies out there, and also versus real stuff, as inflation stays uncomfortably high in the Eurozone. And see, this is happening while Germany is also collapsing. It's got a demographic collapse going on at the same time, and it's got an industrial collapse happening because it basically bet on cheap Russian natural gas in order to run this, what actually was an amazing industrial machine. Germany was the success story of the global economy a decade ago. And now, they opened their borders. They let way too many people from incompatible cultures come in. They put up with the U.S. blowing up the Nord Stream 2 pipeline and cutting off German gas supplies from Russia. And now most of their major industries are either closing down or moving to the U.S. or elsewhere where there's cheap energy. So Germany, that used to be an industrial powerhouse, is now basically bordering on basket case status. So without Germany and France to backstop the European Central Bank, nobody wants to hold euros anymore. Why would they? Because the Eurozone is currently breaking apart. So that's fairly big for the global economy. The Eurozone is, or the EU, is arguably the second biggest economy in the world. And, if that falls apart, that's going to be very complex for the rest of the world. And it looks like that could easily be the story of 2025.
Could you see the EU breaking up because Britain was the first to bail out? They banned the iconic British double-decker bus, saying it didn't meet EU regulations. You know, little things like that. Apparently, the traditional British breakfast was illegal in Europe. And the Germans and French have never got along.
Well, Brexit was about immigration.
Yeah.
And so Britain, cobbled together 51% of the populace, or of the voters there, to vote to leave the EU and then close their borders and stop immigration. Well, they left the EU, but they didn't close their borders. They let immigration continue at an unsustainable level. Excuse me. And now there are cities in the UK where immigrants outnumber natives, and Britain may be lost as a viable culture. Who knows? So it's completely possible that the EU starts to break up, and I think immigration is going to be the driving force there too. If for instance, Marine Le Pen's party does gain power in France, one of their big policy initiatives will be to close their borders, and then if the EU doesn't offer free travel within the EU to anybody who is in the EU, then what is it? It's maybe a trade bloc, but it isn't something that's trending towards the United States of Europe. It's not going to be like the U.S., where you can go from Tennessee to Texas and nobody messes with you at all. It's not going to be that, because immigration made it impossible. And then who knows what happens? But I think the Eurozone is the bigger issue, because the euro as a common currency is at extreme risk right now. And again, that might be the story of 2025. If the French government falls, if Germany just kind of implodes, because actually the German government has already fallen. They're in the process of trying to choose a new government here. And it's not clear how they do it, because they don't want what they define as the far right to participate, but they can't cobble together a coalition that doesn't have so many Greens, for instance, in it, that they destroy their energy system. So I don't know. It's not clear how Europe gets out of this, or even if it should get out of this. And that's a very big deal for the global economy.
Well, you could see why Germany would be nervous about a right-wing government.
Well, yeah.
If you take a look at what happened there exactly 100 years ago. Some guy with a mustache.
Yes. Yeah, and that's why they're so... Well, that's part of why they're so sensitive. The other part is that the parties in power, the left and the center, just don't want democracy to work. They don't want to take the chance that they could be voted out of office. And so they're kind of using that as a pretext to make, for instance, the again, what they call the far right party in Germany, they're trying to make it illegal, because they're using Hitler as the excuse for denying the will of German voters today. At some point you got to get over this crazy thing that happened 100 years ago and become a fully functioning democracy. And this is Germany's chance. They can let people vote, even if the people might vote for a party that wants to close the borders and not have free immigration from everywhere else in the world, or not. It's interesting now that the right in Europe is anti-war, so just like it is in the U.S. now. So, the right-wing parties in Europe are basically the parties of peace to a great extent, and the left and the center are the parties of continuous war and expansion of NATO, et cetera, et cetera. So, you kind of have the fascist label migrating over to the left and the center in Europe, where they're the ones who are the warmongers, and they're the ones who want to basically erase the existing population with millions and millions of people from other cultures, and that's terrifying, because Europe is basically removing itself from the equation in the global political system. If you can't count on Europe to be in favor of democracy and the rule of law, and they're just being overwhelmed by immigration. They're going to be something very different culturally and politically in another decade or so. Then, the U.S. is kind of all alone out there in the world. And it wouldn't be a surprise if we started cutting deals with China and Russia just because we have nobody else to cut deals with. And that could be the knock-on effect of the implosion of Europe.
Gold corrected after the U.S. election and has since been recovering. What are its prospects in the next few years?
Well, one thing that cannot be fixed by new governments coming in any of the big economies right now is the amount of debt that we've taken on. We still have this gigantic financial crisis out there that has to happen. We have to have inflation leading to financial instability, leading to a currency reset. That's baked in the cake no matter who's in charge. That's phenomenally good for gold, right? Because we're liable to go back to some kind of a gold standard, or at least the private sector will decide that gold is the new reserve asset, and everybody will just buy it and bid the price up. So 3 to 5 to 7 years out there, gold looks great. And in the short run, it's a little trickier because we're all due for a recession. We've had this long recovery from the Great Recession that has lasted 15 years or so now, and that's an awfully long time for a recovery to continue. And we're getting to the point now where the debt that's in the system is so unmanageable that we've got to have a big crisis, and it may be the big one. Or it may be another recession that we borrow and print our way out of. That's hard to say, but I think there are a lot of reasons to think this is the last one, in large part because of what's happening with interest costs now around the world. There's so much debt out there that was taken on at much lower interest rates that if interest rates go up, then interest costs go through the roof. And that's happening all around the world right now. You look at the U.S., the government's interest cost was $600 billion a year 3 or 4 years ago. Now it's $1.3 trillion, heading for $1.6 trillion. And that's money that is just borrowed. The government isn't taxing people to get that money. It's just borrowing more money, which means the deficit is going up, which means debt is going higher, which means interest costs are spiking. That's a death spiral. And we are there. So it, could very easily be that in the next couple of years, we see interest costs spike to a debilitating level and inflation spikes at the same time with all the debt that's being created out there. And that ends up just being the end of the fiat currency system. So we should be in that. Okay, but the recession that comes first, is not good for gold. If we have an equities bear market, which we should, and a recession, which we should in the next couple of years, then usually gold and silver get sucked down into that vortex. So that's the risk with precious metals, is that an equities bear market looks very deflationary to everybody out there and causes people to sell their gold too. And that could happen. But basically, if you're a stacker or any kind of a gold bug or gold investor, you should be dollar cost averaging right now, not jumping in with both feet. So if you're dollar cost averaging a flash crash, gold going from $3,000 US an ounce to $2,000 an ounce, let's say, that kind of sucks for your current stack, but it also makes it easier to buy more ounces with the amount that you're throwing at it each month. So it helps you lower your average price. So psychologically, it's easier to manage. So dollar cost average, and you will not care so much about the correction in gold and silver that's coming, and you'll be ready to jump in a little more aggressively at the bottom of the V-shaped drop in price.
The mining stocks corrected along with gold, but haven't recovered as much. What are their prospects?
Yeah, that's been really frustrating because you would think that with gold at $2,600 US an ounce, that the gold miners would just be rocketing, especially the little guys. You would think that the explorers who are, finding a resource that is viable for mining with an assumption of the gold price at $2,000 an ounce. You'd think those little guys would be worth way more with gold at $2,600. But that's not how it has worked. The explorers have just gotten whacked. So many of them are just down hard. And even the big miners aren't rocketing like they ought to have been, because, and in part that's because costs have gone up along with the gold price, labor costs and energy costs, and, debt is more expensive than it used to be. So a lot of the big miners they're seeing their revenues rise because they're making more per ounce, but all of that jump in revenue is not dropping down to earnings yet. Now, there's light at the end of this tunnel, though, because the last couple of quarters have seen rising gold prices, rising revenues for the miners, and some of the miners have reported rising earnings and cash flow because of that. In the fourth quarter, right now, the current price of gold is higher than the average price of gold was for the third quarter, which means we're going to see another increase in revenue for a lot of the miners, and a lot of that is going to work its way down to the bottom line. So we're going to see some really positive earnings reports early in 2025 as the miners report their fourth quarter numbers. So, maybe that's the thing that does it. Maybe sustained $2,600 or $2,700 gold generates enough cash flow that the mining business gets interesting again. And since a lot of these miners are super cheap still, you could see some really nice price increases. And I think that's a possibility for early in 2025. And then, of course, we have the equities bear market and the recession and everything after that. So that's not so good. But the near-term earnings growth and cash flow growth and maybe stock price picture for the miners is pretty good.
The year started off with Bitcoin at $42,000. It's now over $100,000. Where do we go to from here for Bitcoin?
Yeah, Bitcoin is a fascinating thing to watch. Now, there are a lot of cross currents here, and I think the best way to understand Bitcoin's trading is to think of it as a tech stock. It's not money, because money is fairly stable, but it's more like something like NVIDIA or Tesla or something like that, where it's technology-based. It exists in the fairly limited supply, as do the stocks of those companies, and at least in the near term. And people who get excited about its prospects are willing to throw a lot of money at it. Now, it might eventually become money or come to function like money. And when it does, it'll stabilize at whatever price it is at the time. And then people will start thinking of it as a store of value instead of a speculative capital gains generating asset. I don't know where that's going to be, and I don't have a good enough technical understanding of cryptos and how the blockchain works to give good advice when it comes to Bitcoin. If you're a speculator and you want some real action, then Bitcoin is one of the places to be. But there are also risks associated with it that I don't think people completely understand. And among those risks are, what happens if there's an EMP attack that knocks out, microchips and therefore the internet for a long time, or a solar flare, or a cyber attack. All of those things affect your ability to get to your Bitcoin. And if one of those things happened, then it would illustrate the risks of cryptocurrencies and digital assets in general. And then maybe people would be less ebullient about where it's going to go. And there was just an article today somewhere that I saw talking about how quantum computers are on the verge of actually happening. And when they happen, they're going to be able to break any kind of cryptography. There's no kind of password protected this or impregnable that will be immune to hacking from quantum computers. And so whoever gets the first quantum computer, the first real quantum computer, is going to be able to hack anything. What does that do for
yeah, they make those quantum computers right here in Vancouver. They're $1 million a piece. Yeah. So you got a spare $1 million.
And there's arms race going on right now between the West and China for who can come up with the most powerful quantum computers soonest. And we just don't know what that means when it happens. And it's obviously going to happen. And so what does AI, a self-teaching AI capable of learning and growing, running on a computer that is orders of magnitude more powerful than anything we've got today? What does that mean? I don't know. And what does it mean for digital assets in particular? I don't know. But personally, I'm leaning towards the physical just because of the things I don't know. I can't say for certain that Bitcoin won't just sail through the advent of quantum computers just fine, but I don't know. I do know gold will be gold 1,000 years from now. And so I'm leaning towards, I'm emphasizing gold and silver in my own investing. And I'm missing out on this huge run in Bitcoin. But that's because I just don't understand it well enough to really commit to it.
Well, I do know they have a machine that can read all the codes in a bank from a van parked outside, and I'm just waiting until the MAFIA Corporation starts using them to steal money out of your digital bank account. Yeah,
there's all kinds of stuff that, and even leaving aside the hacking and everything, governments might start looting bank accounts and IRAs and 401ks. So when they see their world collapsing around them, they're going to do things that are, that seem crazy to people today, right? And maybe it's related to some kind of war, that they decide to pick a fight with an enemy so that nobody's paying attention to how they've screwed up the local economy. Or maybe it's they decide to loot all the assets out there and divvy those assets up among the aristocracy and impoverish the rest of us. That's called the Great Taking, that theory. And, the technology is going to be available for that to happen, which is just another reason to have a bunch of physical gold and silver. I don't know. I think a lot of stuff that we consider now to be kind of asymptotic on the bell curve of probability, things that are just really out there, are liable to happen, and we don't know what they'll be. We just don't know what the black swan is going to be that we consider most important in the next 5 years. And there's all kinds of things that can happen that are just terrifying. So I vote for security and caution in investing right now.
Well, China always has its eye on Taiwan, the world's biggest computer chip maker. If there's an invasion, that chip supply is cut off. What is that going to do to the world economy?
It kind of ends the world economy, apparently. Yeah. We're trying to replicate what Taiwan can do now with microchips in the U.S. And in the next few years, if we succeed, then that means that the supply chain isn't just, one company in one country sitting right next to a big country that wants that first country back, and that'll relieve that risk. But in the next couple of years, or however long it takes to replicate what Taiwan can do, that's a big risk. Yeah, I agree.
President Trump is threatening the BRIC countries with 100% tariffs if they don't use the U.S. dollar for trade. How will that play out?
That's a really interesting thing, because Trump's negotiating style is to declare war on somebody, just come out with something that is absolutely terrifying. These 25% tariffs on Canada and Mexico, who are our friends, are basically first moves in a negotiating process, where he does this terrifying thing, and then you say, well, let's talk about this. What if we do this? And he says, well, maybe that would move the tariff down to 20%, but that's, not that much. You got to do more. And so that's his process. This thing with the BRICS could be seen in the same light. Maybe he's saying, we're going to negotiate a settlement in this thing. But if we don't, here's what I'm going to do, And normally it ends up with some kind of a settlement somewhere in between what's ideal and what Trump is demanding. That's how his life has worked. But the problem with the BRICS thing is that the BRICS countries are basically doing what they're doing because we have weaponized the dollar. in the U.S. If you cross the U.S. global empire, they kick you out of the SWIFT international bank clearing system, or you don't get loans from the IMF or whatever, or they confiscate your assets that you were storing in London. All right, and so that's leading them to want their own currency that is independent of the U.S. So for the U.S. to say, you got to use our currency or we're going to hurt you, kind of just, I think, increases the incentive for the BRICS to get beyond the reach of the U.S. monetary empire. So this one doesn't seem like the best strategy for Trump, but who knows? Maybe it leads the BRICS countries to negotiate and they work out a deal. But it could also accelerate their movement towards a non-dollar currency. They're buying gold like crazy. They have been for the last few years. So they're, at some point they're going to be able to back their currency with gold. They're setting up kind of a parallel international monetary system with analogs to the World Bank and the IMF and things like that. So it could be that this accelerates the process of the BRICS getting free of the dollar. I don't know. We'll see. This is one where it's a little surprising that Trump's approaching it this way because, he risks accelerating the process instead of slowing it down.
Yeah, right now the proposed BRIC currency is called the unit, and it would be worth about $20 US, give or take, on any given day. And in fact, there's already trading in it. You can, it's not a big volume, but people are already trading units.
Yeah, they're practicing.
Yes.
To see how it would work.
Yeah.
Because, technically, these guys have never done anything like this before, so you have to assume they don't have the technical know-how or they don't have the experience with something like this that allows them to pull it off flawlessly. So if you're them, you want to start on a very small scale with nobody watching and see how it goes. So that's probably what's happening right now.
In a meeting with Canadian Prime Minister Trudeau, President Trump joked about making Canada the 51st state. Would that be a good idea?
Trump is a troll. And he likes to tweet and he likes to propose policies and he likes to make speeches that are basically just designed to needle somebody who thinks he needs needling. And, Trudeau and Trump have not been on the same page about basically anything. And Trump now finds himself with all the leverage because the U.S. dwarfs Canada. Canada is a big piece of Canada's exports go to the U.S. And so the U.S. has, theoretically, the ability to just cripple the Canadian economy if he wanted to do that 25% tariff thing or whatever. So he's joking around right now, but the joking has a serious undertone, which is to illustrate who has the power in that relationship. And no, I don't think Canada should be the 51st state.
Well, the U.S. has tried before. The War of 1812, the U.S. invaded Canada. Canada and the Brits burnt down the White House, and the border stayed the same. Yeah,
that was a long time ago.
It was, My musket practice isn't as good as it used to be.
The U.S. and Britain and France have all fought against each other at various times. So there's no reason to think that it's impossible for the U.S. and Canada to have some kind of a border dispute where somebody sends soldiers somewhere or something like that. But of all the stuff that we could be doing in the world, that doesn't seem like it's one of the ones that we should be doing. There's lots of way more important things to do than that. But just technically, politically, it would be tricky if the U.S. there's also no reason to think why the U.S. and Canada couldn't be part of one big country at some point because we share so much culture that it could be done. It's just that from a U.S. standpoint, Canada would be like one big California. It would be extremely liberal. And it would tend to pursue policies that conservatives in the U.S. wouldn't like at all.
Public health care.
California is just a nightmare for most of the rest of the U.S., right? And to add another one like that, another entity with an awful lot of people when for a state, and extremely liberal tendencies. Yeah. I mean, it wouldn't be a thing that the U.S. should do. Now, what's the province that has all the oil?
Alberta.
Yeah, okay. We would take Alberta in a heartbeat if it wanted to become part of the U.S., a separate state. Bring it on, and then maybe BC, because Vancouver is a super cool city. So to have Vancouver be part of the U.S. would also be kind of cool, even with the political baggage that would come along. But, all of Canada as one state, it wouldn't be a good deal for the U.S.
Well, first of all, as one state, I think it would be pretty hard to govern it as one state, considering it's the second largest country on the planet.
Yeah. I mean, Trump did say that Trudeau could be the governor of the Canadian state, but yeah, it would be very hard to do, because that's a serious landmass that we're talking about here.
Serious.
It would dwarf Alaska and Texas, So yeah, I think that's a non-starter. That was Trump making a joke with a undertone of power, He was just joking about something to show that...
Well, the U.S. already owns Canada corporately. I mean, it's all big U.S. corporations that run everything here already. So why invade?
Yeah.
You're already making huge profits from it.
Yeah, and the reasons for not incorporating Canada would be politically pretty compelling. So yeah, I don't think it happens.
And besides, you wouldn't know a Canadian insurgent from an American citizen, would you? We wouldn't be that obvious.
Right. We'd have to spy on you continuously to find out whether you were a good Canadian or a bad Canadian, and then we'd have to lock up so many of the bad Canadians. So it would just be...
Trudeau's already doing that. He's doing your job for you.
I know. Yeah. He's locking up the wrong Canadians, though, from the U.S. point of view.
John, where can our listeners follow you?
I'm at Rubino.Substack.com, and I run a newsletter there that is basically actionable advice for how you handle all the crazy stuff that's coming.
John, thank you so much for being on This Week in Money.
Thanks, Jim. See you next month.
My guest has been John Rubino. Coming up, Robert Campbell, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter, online at realestatetiming.com. He's speaking to us from San Diego. Bob, welcome back to This Week in Money.
Thank you very much, Jim.
The latest issue of the Campbell Real Estate Timing Letter is hot off the press, if such a thing exists anymore. Can you tell us about it and where our listeners can subscribe?
Hot off the press?
Yeah.
What decade are you living in? Hey, so hot off the press, November 15th, 2024. That's my latest issue. And I publish it once every 2 months.
How do you sign up for it?
You go to my website, realestatetiming.com, and you can sign up. You can sign up for a trial period. I think it's 4 months. You can go a full year. And if you go, you can even go a full year and buy my book. I'll send you my book for free, Timing the Real Estate Market, which is a really good book.
Yeah, can you tell us about it?
Yeah, that I first published it in 2002, and I through research, statistical research, which I'm good at. I identified 5 key indicators that tended to lead major moves in the housing market, both ways, both up and down. And I wrote a book about it and put it in a model, and it's correct 80 to 90% of the time. What's
the best indicator out of the 5 that you really pay attention to?
The best indicator, well, that really is a good question, because if I had to pick the very best, existing home sales, because it's a pure measure of demand, and that's but I have since learned, and it's the first time in 50 years that this has ever happened. Sales are down nationally in the U.S. 42% from their peak back in 2022, and home sales are still rising. So with that massive loss of demand, how come housing prices are still inching higher? It's because there's no supply. Supply's way below normal. So there's no urgency to reduce your price if you want to sell. There's still more demand than there is supply. So that's why the U.S. is right now. It's still going up in value, and I put I'm bullish short term, but long term I bearish because as I show subscribers in my charts, the cycles from the past are easily identified, and if you look at where they peak and where they bottom, they're closely associated with where housing prices are. So that's a key indicator for those people that want to sell high and buy low.
Do you think millennials are going to be the richest generation ever because they're going to inherit all that baby boomer money and real estate?
Well, yeah, the baby boomers do have all the money. But in that baby boomer group, there are a very, very small percentage of that baby boomer group that owns a huge, disproportionate share of the total net worth. So is the average baby boomer, gonna kick ass after their parents die? No, because most of those baby boomer parents are going to need the equity from their home to be used to somehow survive. Because living today is expensive. And most people don't have that kind of savings. Most of it's in their house. And so I guess one of the things you can do, I know what people here in California have been doing for the past few years. They've been selling their property in San Francisco, LA, and San Diego and moving to places like Austin, Texas, and Dallas, and a few other places there in the States because they can replace what they sold in California for about 35 cents on the dollar. And it frees all this money for them to live on. So I know it's a great dynamic that's happening right now because these boomers, and these are boomers that are doing this. These aren't young people. They're on fixed incomes. And so all of a sudden inflation's become a problem, and so now they got to find, somehow to protect themselves financially.
The Dow's at 45,000. Could we be on the way to 50,000 points?
Oh, yeah. We could go at least up to 50,000. And the reason I say that, I just learned that Bitcoin hit over $100,000 a coin yesterday. $100,000. So tell me something's impossible. No, nothing's impossible anymore.
The Fed meets again December 17th and 18th. Do you think there will be any change to the Fed rate?
Well, now that the elections are over, they'll probably hold firm. As I was telling my subscribers in 2024, we're not going to have a recession for this, and this reason, and for reasons like, okay, one thing, the Federal Reserve is going to start dropping interest rates, just to make things look better, even if it doesn't help, and, that's just political stuff. So now that the politics are over, I doubt, my bet would be less than 50% that they don't drop rates. But you know what? Hey, there's betting odds on that kind of thing. So whatever the odds are, whatever I'd go with. But I'd be leaning to the they won't drop.
Does more inflation cause more inflation?
Yeah, it does. It really does. Just and similarly to how greed leads to more greed and fear leads to more fear. With inflation, all of a sudden you have inflation. Okay, and what's the primary driver of inflation? It's deficit spending. Okay, is that why inflation's high in the United States? Yeah, most likely that's the biggest reason. So now we have this deficit spending that that going on and on and on, and that means inflation isn't going away. So everybody goes, oh yeah, the core inflation rate is down to, 3% or maybe less or something like that. So everything's under control right now. No, everything's not under control because in the last 4 years, even using the Cook statistics used by the U.S. government to measure inflation, it's way above what they're telling you. So all that money that inflation is causing financial hardships on a huge number of Americans right now because they can't afford to live. It's not 2%. Food went up 40% or something in the last 4 years or something like that. I mean, and have their incomes gone up? No. They haven't. People are getting squeezed right now. It's during polls done by who was it that did it? The biggest poll maker in the United States.
Gallup?
Gallup. They polled Americans and said, what's your number one financial problem? And they said, in 1922. And they said, inflation. Same question, 2023, inflation. Same question, 2024, inflation. And now it's up to where like 41% or something of all Americans say inflation is their biggest financial problem. Because it is. They're having a hard time, living the way they need to live.
What do you think's going to happen if they put 25% tariffs on goods from Canada and Mexico, the U.S.'s two biggest trading partners?
I have no idea. Anybody that says that they do, there are so many dynamics at work there, Jim. So many moving parts that you and the interactions of which generate movement in other parts to even try to guess what's going to happen because of that. That's such a big thing. That's such a big thing. And I don't know whether it's done for financial reasons, political reasons, whatever kind of reasons. But that could set off a negative set of events for everybody. I'm talking financially now.
What's the latest on California home sales, prices, and inventory?
California home prices have been going up for about the last, 6 months, let's just say. And that's why I've kept the bull in the box. I remain short-term bullish of not only the U.S. but also California for the reason that prices are still hitting record highs or near record highs, even though sales are declining, and it's all due to lack of inventory, very low lack of inventory. It's still 40% below a level that would turn the tide from a buyer's market from a seller's market into a buyer's market. So we still have a ways to go, and unless things start happening dramatically, and like in most things in real estate happen more slowly than quickly. So I think short term we could keep going up for another 6 months maybe. Then the downturn comes. Then the storm comes. That's when the market, goes over the cliff and into the water.
How long do housing market cycles last, and where are we in this one?
Housing market cycles, when you look at them, when you adjust them for inflation, which is an excellent way to try to figure out what's really happening. In the United States, going back to like the 1970s through 1920s, the cycles lasted about 6 years up, 6 years down, 6 years up, 6 years down. And I've shown my subscribers a chart of that where you just can't deny that's a pattern that has played out very, very closely for the last 40 or 50 years, because it has. And so I pay close attention to that. That's just the way the world works. I'm not going to bet against that. So you got to bet for it. So that's why I'm betting against that. And it's so the current cycle. The current cycle bottomed in 2012. So on the upside, 6 months up, 6 years up would have been 2018, and it certainly didn't bottom in 2018, and it's still going reasonably strong even 6 years later. So this upcycle has lasted like 2 times as long as the normal upcycle going back 40 or 50 years.
Are cities growing to the point long-term residents no longer want to live in them?
Yeah, you know what? I can see that being a trend, at least with people that have money, that can afford to get out. Because the inner cities have become dangerous, and that people with a few bucks don't want to live around dangerous people. It's because of the economy. Lots of homeless, lots of gangs, and all that kind of stuff. So moving away from the urban centers, I think, is a really good idea for the safety of you and your family. But I don't think the average American has the financial ability to do that.
Urban living versus rural living, are there pros and cons for both?
Well, let's go with the pros. Right now, I personally live in an urban environment. Yeah, I don't live in downtown San Diego, but I still live in San Diego County near the beach. So, and this place is getting more urbanized all the time. So what's good for getting away from this is, one, your stress level drops way down. Two, it's way less expensive. That your dollar goes so much farther if you get away from like California or something like that, in its high cost of living. And three, it's a happier place to live. People in California aren't that happy anymore. Very, very divided. I'd say it's probably the most divided state. I'm sure it's not, other states but as a state, it's very, very liberal, and San Diego happens to be the most, conservative county, maybe Orange County too, in all of California. But California is a very, like San Francisco and LA, very, very liberal cities. And you know what? It's a lot of people don't want to live around that anymore. It's getting too crazy, so they're moving away, to a lot of places that just away from that. And I could see that completely, right?
Yes. Now, of course, the question we have after that is life fair?
No, life is not fair. It is only fair from the standpoint that what you receive in this world is what you take, what you actively take. I'm not talking about being holding up stores or anything like that, but that you go for, and through your own actions in life and what you do and when you do it, that you do certain things, and that's why you're taking control of the situation, and you're making your own money, and you're protecting yourself. And that has to be done because, not making and maintaining wealth is not easy to do. Nobody ever wants to talk about that, but that's the fact. It's not easy to do. And, do most people become as wealthy as they want to be when they were young, as they get older? No. It's a very small percentage. So why is that? That's a great question. Because because it's hard, for one thing, and two, that we don't live in a world that's a level playing field. It's against the average guy. So you got to be really smart and really clever and be willing to take action when necessary to do well financially.
How important is it being physically fit?
Well, that's the whole foundation, guys. If you want to survive in this, let's start with survival first. If you want to survive in this world, you better be physically fit. And if you want to do well in this world, you better be physically fit. And if you want to excel in this world, overperform, you have to be physically fit. That's because physically fit has a direct correlation with how well your brain works. And the better your brain works, the more successful you're going to be, as long as you abide by the signals that what the data is telling you to do. So it's all about physical fitness, guys. And the first rule of physical fitness is get your weight down. Get your weight down. That's the first thing you do. If you're 50 pounds overweight and you go into the gym to try to get stronger, bad idea. If you want to be fit, first thing you do is got to get the weight down, and that's the hard part. But like I said about making money, hey, getting physically fit isn't easy either. It's a lot of work. So you better decide in advance, how important is physical fitness and health to me? And if it's like off the trail high, okay, great. Now you got to do the work, and it's a lot of work, but it's a magnificent journey.
Where can people follow you, buy your book, Timing the Real Estate Market, and subscribe to your newsletter?
They can go to my website, realestatetiming.com, realestatetiming.com, and they can do everything Jim said.
Bob, thank you so much for being on This Week in Money.
Thank you, Jim. It was a pleasure.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter, online at realestatetiming.com. He was speaking to us from San Diego. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, John Rubino, and Robert Campbell. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.